Hey, what's up, everybody? This is Raja Banks. May now. So what we're gonna do today is we're gonna go over all the trades taken in the month of May. I think I took around 10 trades in May. 10 trades in May, 2 weeks, made about $68,000. So we're gonna go over all the trades, right? And what you're gonna notice is that all the trades I took in the month of May that generated $68,000 so far in 2 weeks, all trades were basically based on the same setup we teach in Smart Budget Concepts. Were like some were a little bit advanced that we're gonna go over in our mastermind that we're gonna have, but yeah, let's just go over all the trades. I know a lot of you people requested these things and you guys really enjoy it. So I decided I had some time here today and it's just like, let's say it's a birthday gift, you know. So let's go over the trades over here. Awesome. So got my MetaTrader. So let's say it's the first trade. So okay, so first of all, you can see right here, total was like 68,000, commission was 1,700, balance was like 66,600. So we're gonna go over all the trades here one by one. So the first trade we're gonna go over is a buy on gold. And I remember this buy on gold. You look at the date. This was the 3rd of May, and this was FOMC. This was literally just FOMC. So we're gonna go towards 3rd of May. Let's see right here. The idea was super simple. With news, what I do is I basically do buy stops and sell stops. And let's go towards the 15-minute time frame, 3rd of May. So I got slipped, and basically what happened here is that my buy stops were just above the previous candle, and price came up, slipped my position up till here. So I got slipped about 16 pips, got activated. Blue arrow is where the activation happens, and the red arrow is where the trades basically gets closed. You can see right here. It was a 20 lot, made about 3,800. These were probably around 19, 20 pips at this point. So it was a very easy news trade, buy stops, price went up, made money, perfect. The next one was a sell on the 4th of May, the day after. This was during pre-London London session. So the 4th of May, sell right over here. Okay. Now, this was also very simple. Basically, we moved up with volume due to FOMC, and price was coming down. We had this clean range left inside, and this was like a 60 pip range. So I looked at the 15-minute time frame, and this candle pattern right here that you see, this is the perfect impulse entry scenario, which I like to trade. Personally, I like to trade. So let's take a look at this on the 30-minute time frame, see what it looks like. 4th of May, so 30-minute was something like this, right? So look, so 30-minute candle closed bullish, so we form support. So when we form support, I'm looking at this and I'm asking myself that, okay, if we form support on the 30-minute candle, if we break that support, I think we can continue pushing down. Now as the 30-minute candle closed, it didn't close strong enough for me to take a buy, because then that would have been in a 40 pip range. So it closed like a small body. The wicks were bigger. So whenever you have a candle which has a small body and the wicks are bigger, that basically means the buying are very tricky. So I dropped down to the 15-minute time frame just to look for some that extra confirmation. And what do you think I saw? I saw the candle close with no wick at the bottom, so I'm like, okay, perfect. This is a perfect impulse entry. Took a sell right here, stops for about 25, 30 pips over here, and got about 8, 20 pips as price came down. Now someone might say, oh, but Raja, your stops were 20 pips, 25 pips, then how come you only secured 17, 18, 20 pips? It wasn't your risk reward negative? The reason why I don't focus on the negative risk reward is because as soon as you move your stop loss, your risk reward changes. So it doesn't matter how big your stops are, or how big or how small your take profit is. If you can manage your stop loss, if you can manage risk as price goes in drawdown, it's basically all comes down to managing risk, right? So that's how I trade. If you want to say, oh, negative risk reward, that's totally up to you. Whatever, still made money. Made about $4,980 on this 30 lot. So mind you, I got like a $500,000 account. So that's why these values you see right here. So this is basically 1%. Um, let's take a look at the next one. Next was a buy trade on gold, like around New York session. This was a loss. This was a $4,400 loss, and I don't really know why I took this trade, but I kind of know why, right? So okay, so looking at the 1 hour time frame, and I really wanted to execute some sort of a trade. So I saw a price coming up, make a low, price came up, and the 1 hour candle closed bullish. When the 1 hour candle closed bullish, I'm like, okay, what's the probability that we're just making a lower wick to continue pushing up on the 1 hour to maybe like to fill this wick or whatever. I was like, okay, maybe there's a high probability. Let me take a buy. So I took a buy. Now when I look at it in hindsight, the 30-minute candle, it closed bearish, right? So that was my first mistake. The candle closed bearish. I should have waited for the candle to close bullish to have the extra confirmation, but I did not wait, and I paid the price with a stop loss. So kind of like lost the profits I made. That I think on the 4th I made like $400 on the 4th May. I made like $400. It's whatever. I paid the price, and basically that was about it. The next trade, this was so we went over 3 trades now. This one was a bigger trade I had. This was a gold on the 5th of May. And let's take a look at this over here. We come up over here. This was around London session. This is also very, very easy. This was based off of the 30-minute time frame. You can see right here, we were creating a support on the 30-minute, right? 30-minute candle closed with little to no wick at the bottom. And this 30 minutes started to break the low. You can look at the time right here, started to break the low. I took a sell, stops were above this area, a 20 pip stop loss, and had like a massive, massive range going down till like, 2032. So this was an easy trade. Again, remember, same time, London session, and kind of like the same pattern as the previous trade I took on the 15-minute, right? Same pattern, same time, almost same time. Took trade, candle started to reject over here, so close out the trade at a $15,500 profit, right? $15,500 profit. Trade lasted for about not even an hour, like 40-minute trade, made $15,000. If this was so this is a $500,000 account, right? If this was a $50,000 account, then you would have made like around like 1,500. If this was, let's say, a $5,000 account, you would have made about like $150. So it was a $500,000 account, made 15,000. If this was like a $5 million account, this would have been around 115,000. Whatever. So then we move on to the next trade. This was around New York session. I don't know why I took the trade. It's a 5 lot. Because I took the trade, price moved down, and then I closed it. And then I should have held, but who knew price? Oh no, actually this was news. Yes, this was NFP. Was this NFP? Yes, this was NFP trade. NFP, basically we got slipped. So I got slipped right over here. NFP started right here. I got slipped around 100 pips. Maybe it was NFP, maybe it wasn't NFP. I'm not going to go in for a factory and check. I don't know, but I'm going to count that trade as like whatever trade. It's like 5 lot, $230. Who cares? Nobody. All right, moving on to the next one. This was a sell. Now, I took a break, went to Dubai with the family, was traveling. So I didn't trade those whole, let's say, week and a half. I came back and then I traded on the 17th. Right, I didn't trade from the 5th of May till the 17th of May. So my next trade was on the 17th. And this also went really well, I would say. Let's scroll all the way towards the 17th. And let's see if, I remember this trade over here as well. Perfect. We got the 17th right here. And this is where you see price coming down on the 30-minute time frame. Okay, so this is what I also posted on my Twitter. This analysis I posted on my Twitter. Basically, the whole idea was that we're creating a resistance right over here, right? We're creating a resistance. We were also creating, let's say, a support right here. So the whole idea was that we're kind of like consolidating in this area around, pre-London, pre-London. We're consolidating, and if we break above, let's say, 1993, 1994, we can continue to move up. But if we are going to break the support, volume is going to drive price down. That's what you got to understand. Whenever you have consolidation to the left hand side, volume is going to be the only thing that's going to drive price through that area. Volume. And that's what happened right here. As price started to break the lows, I took a sell. I'm like, what can go wrong? Got like a 12 pip stop, 15 pip stop, and you can anticipate a price to continue pushing down in its 40 pip range, because there was volume and we're anticipating volume. Now someone can say, oh, Raja, how do you know that how to anticipate volume? The best way to anticipate volume is by just watching it. You watch it for about, let's say, like 6 months, 7 months, and then you try to get the idea, right? You get the idea, you start to get that intuition to know when price is going to move, how it's going to move, like the volume is there, how far can it really drive price. So that's exactly what happened right here, right? Made about $7,000. Next was this was a pound yen trade. I don't know why I took this trade. It was basically a sell I want to take. I don't know why I closed the trade, and it was just whatever, So we're gonna ignore this. $100 loss, no problem. I'll just go feed the hungry. Next one. This was a sell the same day. So this was the third trade I took. This was on around New York session. So the first one was in London, pre-London. Then the next one was around New York session, pound yen. And this was the third trade on gold. This was around the New York session here as well. This one was pretty simple. We were trending down. We had range to the left inside. We got a 30-minute candle. 30-minute candle closed like a big rejection, strong body candle. Now, you got to look at the bodies, right? This body is bigger than the previous one. Now, if this happened on this candle, small body, I would have never taken the sell. So once this candle formed, big rejection, strong body, this means that this body is stronger than the previous candle's body. This means that the bearish momentum is coming back in town. So I took the sell as we broke below the low. Stops are about like 15, 16 pips, and price went in profits. Got like 24 pips, made about 7,000, and secured. And yeah, so basically broke the low, impulse entry to fill the wick over here to the left hand side, and price continued to push down. Now, price will only fill the wick when there's momentum, when price is already moving in that direction, and it's going to fill the wick as it moves towards the downside. So made about 7,000 right there. And now slowly we move on to the bigger sell I had. This was a sell on gold the next day. This was actually very, very simple. We had a huge bearish volume. Huge bearish. If you guys remember how much gold fell on the 18th, I think this was on Thursday, right? On Thursday, if you remember, man, the volume was so crazy on gold. I didn't get the whole thing, but the idea was simple, right? We made the low, we came up, candle closed, small body, boom, bearish body formed, so resistance formed, and as soon as the candle started, look at the time right here, as soon as the candle started, boom, took the sell, stops were above the previous candle, 12 pips, 15 pips, whatever, and basically just let the volume drive price down. And look what happened. Right after I closed, right? So I closed around, let's see over here. So go all the way down. I closed somewhere, where was it? Right here, right? Okay, so I got around, like 80 pips, 90 pips at this point. I got 90 pips, and then after I closed, price fell another 150 pips. Who would have known? But I was happy with my result. 29,000, could have been 30. Actually, it was 32,000, but I was taking a picture or whatever, making a video, and then I lost money over there. Lost about like $1,000, $2,000. Whatever. And then move on towards the Friday trade. This was a buy on pound yen. This was a very simple buy over here. Very easy, very simple. You can look at the 30-minute candles. Now I want to explain this I also explained it on Instagram, but if I took this trade based on a 1 hour time frame, you can see how price made support when we went up after this candle closed. It was very tricky to take a buy because the 1 hour candle has already moved 1, 2, 3 candles, and for it to move more would have been risky, so I dropped down to the 30-minute time frame. Now looking at the 30-minute time frame, idea was simple. We created a support right over here. We had volume from New York session. Price broke the high, took a buy, price went up, secured 20 pips, made about 4,600 on a 35 lot, and basically called it a day. So I took like 10 trades in May, 2 weeks, 10 trades, $60,000+. Very disciplined. No trades were forced. Maybe like two trades were forced, but like whatever, who cares, right? I managed my risks. Lots were smaller. So whether they're like risky trades, you gotta reduce your lot size. Now I hope this helped. I also hope that like you could see the simplicity, the same basically patterns, the same like risk management. Almost the same time when the trades were taken, maybe like 1 or 2 hours off, but overall it was all the same. So hopefully this was helpful. We'll see you guys on Monday live stream, hopefully. And yeah, awesome. Take care, guys. Have a great weekend.